Alright, hey everyone, welcome back to the channel. So in this video today, we'll be covering liquidity concepts for supply and demand, smart money trading. So in this video, we'll be covering liquidity concepts, why liquidity is important to identify, how you can use it to become a profitable trader, and how you can avoid becoming the liquidity as well. So covering liquidity providers now, a simple question, what is liquidity? So to keep it simple, liquidity is just an area with resting orders, stop losses, and pending orders. Essentially, we are all liquidity, but that does not necessarily mean all orders must be taken out by smart money, as some areas of liquidity are not liquidated enough for it to be worth the grab. The most popular areas are where retail traders usually execute a position from, or where they place their stop losses and take profit levels. So that includes support and resistance, also known as equal highs and equal lows in the smart money concept world, trend lines, as well as the 6180 fib level, also known as the golden zone to some traders. So these areas have a lot of orders placed, as retail traders have been taught to buy and sell from these areas. So knowing this, smart money would aim for all the stop losses placed above or below these areas, so it would be worth the grab. So it's pretty easy to identify when those areas are actually going to be taken out, because we'll be able to identify it very easily on the charts. So the point of using liquidity as our confluence is we want to be the first to get into the trade, so everyone else that also gets in helps drive the price into our desired direction. You always want to identify where the liquidity is, because again, you don't want to become the liquidity. Just understanding these simple concepts following market structure will elevate your trading to new levels. And risk management will play a huge role in this, because you'll be able to identify where a responsible level is for your stop losses and points of interest. So risk management will play a crucial role in this as well, because you'll be able to identify reasonable areas to actually place your order. So you'll be able to identify key points of interest as well as key stop loss placements and take profit levels. So liquidity can actually reduce your risk exposure in the markets to enhance your trading overall. So to reduce risk as well, we like to stay out of the market in those Asian sessions. So Sydney and Tokyo session, we don't like to trade then, because essentially there's not enough volume in those sessions, that the price will just be consolidating. And then once London opens, London will either take out the highs or lows of the Asian range of the Asian session. So London is a perfect time to be looking at executing your positions. And now the London-New York overlap, which is when New York opens, there'll be a 4-hour gap where London and New York are trading together. And that is the highest amount of volume traded within that trading day. So New York open can be very volatile and present great setups with those liquidity confluences as well. All right, so moving on to liquidity patterns now. We've already covered volume, but just remember, volume plays a crucial role in these smart money concepts. So that's why I only trade London and New York sessions, because that's when the volume is at its peak. So now we'll start with equal highs and equal lows. All right, so with this market here, as you can see, we are trading sideways, rejecting a lot of resistant levels. So what you can do is mark these resistant levels if you want. But what we want to do to identify these equal highs is we want to find wick highs. So mark from wick to wick, mark that as our liquidity. And so what we've identified here is retail traders selling. So what this is just retail traders selling at this resistance. So what smart money will do is just identify them and take out as many traders as they possibly can. So what we need to do now is identify our demand zone. And we basically just set our limits at this area of interest that we have. And we want to target these equal highs for our take profit. And just wait for price to react. So as you can see, we did get a liquidity sweep here. But what that was price reacting to a demand zone on a lower time frame. for all the traders that wanted to go long from this demand zone here. So we actually called these two trades in our Discord server. So we let our traders know that we were both taking these trades and how we were managing our positions with them as well. So our take profits were these highs here. So that's more liquidity for us as well. That's what we're targeting. Because this first one was essentially just a liquidity sweep. So there was tons of liquidity still at these highs that needed to be taken out. But also, as you can see, we have heaps of equal highs here. So we have even more traders that are selling at these levels here that we can chase for the future. So that's how we were able to secure 2 profitable trades with just identifying equal highs alone. So now I'll show you how to identify equal lows. It's basically the same concept, just obviously it's support now. So even with this market here, you can even say these are equal lows here because it's close enough. These traders here that are buying at this support level here, they're actually getting trapped into this trade and getting taken out for us to be able to get into our trade. So I'll find a better scenario and I'll show you. Actually, just before I show you some equal lows, I just want to explain this trade as well. So we were able to take this trade in our Discord because we got these equal highs that printed up here. So what this was just, again, those retail traders selling from these levels and getting taken out of the market early. So as you can see, price speeds up and taps us in, and we actually target some equal lows down here to actually secure profits in our trade. So liquidity is just not a tool to take profits and close your positions out. You can actually take your partial profits and even move stop losses to break even. So essentially this is equal lows here as well. You can just mark it up like that, however you want, personal preference, but this is a form of support or equal lows. So we were able to capitalize on both sides of the markets here. We're able to take out those early sellers and early buys. So the way that these equal lows helped us better our trade was we chased the liquidity that actually drove the price up into our desired direction. So these traders that went long here, if they did not take profits at these levels here or around here at this resistance maybe, they were taken out of their trades towards here. So as you can see with this big liquidity grab candle here, we did take out every single long trader that went here, and our take profit got shortly hit after that. So there was a form of equal lows, equal highs in this, but we'll get over to some better examples now. Alright, so again, this trade we called in our Discord server. If you want to connect with myself and other profitable traders, make sure to click the link and check us out in the description. While you're there, please leave a like, comment, and even subscribe to the video. And let us know if you would like to see more liquidity concepts in the future. Let's get into the breakdown and I'll explain all the liquidity that we identified on this trade itself. We'll start with market structure. So we are trading bearish, but we do get a change of character that happens here. So once that change of character happens, we can start identifying liquidity concepts now. So we have some equal lows down here. So a bunch of retail traders buying at support. Now we have equal highs. So a lot of retail traders selling. So it's just this constant movement sideways. So first we got the sellers that were liquidated here. First we got the buyers that were liquidated here, and then shortly after, the sellers were quickly liquidated after. So what we can do now is keep that in mind, but wait for this change of character to play out. And then we can start looking for areas of interest. So we've plotted our demand levels here. Now we want to be looking for buys, but First, we need to identify some confluences of why we want to be buying from here. So we do have some equal lows here. That will be number one for our confluences. Number two, we have imbalance. So we've got inefficient price action that needs to be filled. So we've got imbalance that needs to be filled. And we've got market structure on our side now. So we've got that change of character that's come into play. So with this imbalance paired with liquidity, with these equal lows, we're able to set some buy limits at this zone here with a reasonable stop loss level. Now, why we're setting limits at this zone with our stop loss placement here is because this zone took out previous liquidity and should be highly liquid to be able to take trades like this. So now we have to start looking for some targets for our take profit. So this swing high here would be perfect, but if we look left, we do have a earlier supply zone where price may reject, so we do want to get out of the market as early as we can, obviously if it makes sense. So we set our take profit to this level here, and we were able to easily catch a 1 to 4 risk to reward, just as simple as that, just using basically market structure, imbalance, and liquidity. These equal lows are really on the charts everywhere. You just got to pay attention and make sure you're identifying them properly. All right, now we'll jump into some trendline liquidity. We'll see how that can play out now. All right, so again on Euro USD, we called this one in the Discord not long ago. We got a 6R return. So something like that, yep. So what we identified liquidity wise for this trade was a trendline build up to the upside that was going to be taken out. So that's confluence 1. We had liquidity to chase. Now confluence 2 for actually entering the trade was this trendline liquidity that was engineered above the zone. So what that means is retail traders just buying at these touch points of the trend line. So basically, as you can see, the price action sped up coming into the trend line because the smart money was seeking to take out all these retail traders to give us a higher probable trade at the end of the day. And again, this liquidity model was paired with imbalance. So for an A+ setup, most of the times you want to see imbalance above and below your zones, a balance above demand, and imbalance below supply. So this liquidity model plays out perfect with imbalance with your trades. All right, so now going over the 6180 fib level, also known as the golden zone. So as you can see, we've got a break of structure that happened here. So the swing point would be this one here. This is the previous low that took out that high. So this is our swing point here. Now we want to mark that low up and mark to the swing high. And this 6180 fib zone lines up almost perfectly with this candle here that actually traded off into those retail traders direction. Now what that does is it induces those early buyers into the market. So when price comes back down into our desired direction, it actually takes them out of the market. So many retail traders have been taught to buy and sell from this golden level of the 6180 fib. So how that plays a role into my trades is I wait for market structure to react off of this golden zone. Then I simply just wait until price does its thing and trades back into my area of interest. And the reason why I wait so patient is because we have that imbalance paired with all these liquidity models. So I can trust my edge and get into the market. So why this trade reacted so perfectly is because we had liquidity to chase, two forms of liquidity to take out for our entry. We had the trendline liquidity as well as a 6180 fib, and we had that inefficient price action to fill. So that's why this zone had such a good reaction, because we had so much liquidity and imbalance that was just paired with this trade to set it up for success, and we're able to capitalize on the market structure as well to get a beautiful 6R return. Alright, so that's the end of the video, guys. If you did find this video helpful, don't forget to like, comment, and subscribe. Also, turn that post notification bell on to keep updated with our future videos. Don't forget to share your thoughts in the comments below. Obviously, you've got your own opinion. Let us know if you liked the video or if there's anything we need to improve on. Alright, I'll see you in the next video.